Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, June 11th, 2025. Let's take a look at the charts. Start with the big picture. Just a reminder that we topped out in the low 350s. We tested a lot over the last 4 or 5 weeks. For several weeks in a row, we even pushed through it, closed above it on a daily basis, as you can see here illustrated on the daily chart, only to fall away and close the week clearly below it. It is the weekly settlement above 353.14 this week. If that were to occur, that would set up a longer-term buy signal that would likely play out through the third quarter into later year, the ultimate objective then being the 515.51 5-year channel top. We came close to testing that channel top when we closed above the 353.14 2-year channel top for the first time back in November. It basically sustained this vertical move, almost reaching the 515.51 5-year channel structure before falling away. We bounced a bit for about a week, then closed below it. We continued to cascade south then to the April low. So this is still an important area, and we have a 50% upright side retracement at 351.39. Now, after having fallen away from this low 350s resistance, as you recall, it was a few days later that we actually closed below this recently or newly formed channel bottom that is now at 354.41. We could have that actually as a minor point up here. We don't, but it was the sell signal that indicated this channel bottom at 286.36. At the time, we'd mentioned like a 2 to 3 week, 3 to 5 week objective. That all happened in about 2 days. And obviously, last week's Trump Musk feud fueled that sell-off. But we've made a decent comeback since testing the channel bottom at 286.36. 286.36 still remains our base of near to midterm support, able to contain weekly selling pressures and above which we should now push back into the low 350s again. We just might see that this week. On the way up, we have 331.61. That is a 5/8 upside Fibonacci from that high a couple of weeks ago to the last week's low. I like 331.61 as our pivot point through the rest of the week to the upside because it correlates well with the low area that was established back in the middle of May when we were doing this consolidation. 331.61 can contain today's highs. From here, we can fall back potentially intraday to 309.31, the 3/8 Fibonacci. We might trade inside of this for the day and possibly into tomorrow, Thursday. Now, if we happen to push through 331.61, we do, of course, still have this former channel bottom. And this up till yesterday, up until today rather, 331.61, the channel bottom that I find here at 335.76 was our pivot point. But let me go through a scenario that I think could happen. That is to say, if we happen to push through 331.61, we should then test 335.76. And this could still contain buying. We could fall away from here, and after testing 335.76, if we then close below 331.61, that maintains a short play, short term only. You know, I'm reluctant to advise an aggressive short position in the 331.61 area. I think it's a solid day trade level, but you've got a couple of bullish developments here. Number one, we tested a channel bottom that we've been mentioning all along could actually contain selling into July activity. And we are probably, almost 5/8 of the way back up, almost 61%. I was going to say we're about 60% of the way back up. And yes, we are about 60% of the way back up. 61.8 is 331.61. We also closed above last Thursday's high. That is the low of the high. And so that in itself is also supportive, if you will. So 331.61, I don't want to dissuade you from selling it. I'm just saying I don't see it as like a 3 to 5 day swing trade to the downside. I think it's a solid swing trade back down to 309.31. And yes, if we close below 309.31 today, that would also be below yesterday's 310.66 low. That should call a good high for the week. And we should then spend the next day or two, Thursday, Friday, retesting 286.36. So Closing today below 309.31 sets up a retest of 286.36 within a day or two. Closing above 331.61 indicates a retest of the low 350s within a day or two. 351.39 to 353.14 has been demoted from 4 to 3 stars because of just all of the the slippage, the violation, but it's still able to contain weekly highs and still has multi-week buy signal qualities. In other words, if on Friday we close above 353.14, there's just no compelling reason to be playing the short side in Tesla. You want to be long Tesla. We'll have a 1 to 2 week target, we'll have a 3 to 5 week target, and we'll have, of course, the 3 to 5 month objective that you can see here at 515.51. But none of that has occurred yet. We could top out here through next week, and we can fall away. The 351.39 to 53.14 area is a solid zone to sell into, as we continue then really into July trade. We can fall back to what is now at 286.36. We could continue to fill this area out for the next 2 to 3 weeks, perhaps. Now, as I've been saying to the downside, if we were to close below 286.36 today, I think you should liquidate your long position if you already have one. Any long positions that pertain to the time frame of 2 to 3 weeks out to 2 to 3 months, I think should be covered. The question is whether you should go short, and I still think it should be nuanced. So you're long above 286.36, expecting the low 350s again over the next, 2 to 3 weeks, possibly 2 to 3 days. If we close today above the 331.61 level, within 2 to 3 days, day or two, we should push back into the low 350s. But if we close below the 286.36 level, there is a case for being short or getting short, reversing and going short. But I think the more compelling case for that is a settlement below 272.87. So you can bottom pick 286.36 all you like. You may already have, you may be long now, anticipating the low 350s where profits can be taken on a 2 to 3 week swing trade. If we close above 353.14, it is get long again for another 2 to 3 week, even a 2 to 3 month bullish continuation. Downside, last thing I'm going to say, and it's not going to happen today, but if over the next week or two we settle below 272.87, that is the short play I'm talking about, wherein within a week or two we fall into the low 220s, and within a month or two we fall into really the low 160s, the 159.50 to 165.60 area as a 5-year channel support that I would expect within a couple of months of closing below 272.87. Hasn't happened yet, and what is still likely to occur is pushing into those low 350s over the next week or two or day or two above 331.61. I just want to mention that on Tuesday, Wicked Stocks put out a stock pick on Lam Research. And we also put out 3 stock picks last week, including Tempest AI. You might want to look that up. Take a look at that chart. We provide the buy signal if it were to occur, all the conditions necessary. We follow up with support on a week-by-week basis. On all of our stock picks, we put out 2 a week. We'll be putting out another one today, Thursday, and with that, you also get daily Triple Q, daily SPY, weekly Apple stock analysis. We offer it all for 5 days free up front. So go to wickedstocks.com, take a look at our 5-day free trial, fill out the forms. You'll have access to everything, including our stock picks, 3 last week, 2 this week, always looking for 20% moves on those underlying stocks over the course of the following 3 to 5 weeks to 3 to 5 months. I think that pretty much covers it. I am going to leave it at that for Wednesday's Tesla. You have a great day.